How can the US election impact markets? Watch to see how stocks, currencies, and gold could be affected, and what to watch if you're trading. First, let's dispel a myth. Many think that one political party is better for stock markets. But if we look at the S&P 500 and almost 100 years of data, there isn't a clear difference in returns when we have a Democratic or Republican presidents. The best returns tend to occur when Congress is divided and one party controls the Senate, limiting what the president can accomplish. In these circumstances, the annual return for a Democratic president has been 13.6%, while for a Republican president it has been 13.7%. Talk about a close tie. This tells us that whoever wins this year, stock markets are likely to gain irrespectively. So if panic sets in because of the election, we can take it into account when we plan our trades. How about volatility? During election years, market volatility tends to rise. For example, since 1950, the S&P has fallen by as much as 40%, risen by as much as 32%. As we alluded to earlier, this heightened volatility is often driven by uncertainty, but it can also present buying opportunities rather than signals to sell. What if Trump becomes the next president? Considering his proposed policies, if elected, the US stock market could receive a boost. He aims to cut taxes, including corporate tax, from 21% to 15% to boost investments, spending, and increase GDP. However, he also plans to add a 10 to 20% import tax across all goods, making things more expensive. Mexican cars and Chinese goods might be slapped with tariffs up to 100%. The consumers would of course need to pay for this. And the plan behind these high tariffs is to force companies to move jobs to the USA. However, setting up plants takes years. It might not happen if it doesn't make sense from an economic perspective. Hence, inflation is bound to pick up. For the strategy to succeed, the jobs created in the USA need to be enough to compensate for the higher costs. If not, the USA might end up where the UK is following Brexit, with fewer options on the shelves and permanently higher prices. Yet, with all this said, stock indices like the S&P 500 are likely to take off in the short term. In the long run, if inflation materializes, the Fed would need to keep rates high, which would boost the dollar. Some banks think the EURUSD could drop as low as 0.95 from today's level. Kamala Harris is expected to boost house building and invest in green technologies, adding hundreds of thousands of new jobs across multiple industries. For households, her policies aim to reduce costs significantly. For example, Harris has proposed expanding the child tax credit to $3,600 per child from today's $2,000, while offering $25,000 down payment support for first-time buyers. Hence, we could have a house market bonanza in the USA. However, these measures are more focused and are not anticipated to alter the GDP growth in the short term or in the long run. In addition, many of the green tech investments are already underway. Hence, a Kamala win is likely to have a minor impact on the current trend of the S&P 500. There are discussions about taxing unrealized gains, increasing taxes on corporations and the wealthy, and increasing the capital gains tax to 33%. These changes could make US taxes among the highest in the developed nations. But it's important to understand that if Congress is divided, passing such radical proposals would be difficult. In either case, if Kamala wins, the mood might turn less bullish in the short term. As the election approaches, the S&P 500 is trending up and hitting all-time highs. The CNN Fear and Greed Index is at 72, signaling greed in the market. Not the best time to buy. Plus, the risk-to-reward ratio is not favorable right now. Key support levels to watch: the September low at 5,385, about 6.4% below the current price, and the August low at 5,092, which is almost 12% lower. These levels could attract swing and long-term traders, especially if the market gets nervous due to the election. US stocks offer traders a clearer bet on the election outcome, as Trump and Harris's policies sometimes directly contradict each other. Keep an eye on private prisons and illegal migration. One of President Trump's key promises is to crack down on illegal migration and mass deportation. This means that if Trump were to win, private prison stocks like Geo Group and CoreCivic could see significant gains, as they historically received more government contracts under Trump than under Biden's and Kamala's rule. On the other hand, the Biden administration has shifted away from renewing large contracts with these firms, favoring government-managed facilities. This creates a nearly binary outcome for these stocks, heavily influenced by the election outcome. Geo was up by 18% at the time of recording this video, but at one point was up with 68% following the assassination attempt on Trump. Currently, the stock remains in an uptrend and will continue to do so as long as it trades above $11 a share. How about the car industry? One of Biden's flagship strategies is to support the transition to a greener economy, and the government has been offering tax credits up to $7,500 for buyers that buy electric vehicles. This has, of course, significantly boosted Tesla's revenue, and 50% of the revenue comes from the USA. Additionally, Harris aims to extend electrical vehicle incentives to the commercial transportation sector. Trump, however, would like to eliminate the $7,500 electric vehicle tax credit and instead offer tax incentives for oil and gas drilling. Hence, expect changes for Tesla if Trump is elected. Other companies to keep an eye on are First Solar and NextEra Energy, two leading renewable energy companies. Both firms have emphasized in their earnings report how crucial the 2002 Inflation Reduction Act is, but Trump plans to roll it back. Solar was up by 63% year-to-date and in a clear uptrend above $194 per share. How about the currency markets? A decisive Trump victory is expected to have the biggest impact on the US dollar. The combination of lower taxes, higher growth, and higher inflation can force the Federal Reserve to keep rates high, with some analysts predicting the EURUSD could reach 0.95 by the end of 2025, while a Harris victory would result in the reversal of Trump-era tax cuts, reducing GDP growth in 2026. This would allow the Fed to keep lowering interest rates, keeping the dollar on its current bearish trend. EURUSD traded sideways for 378 days up until August 2024, when it triggered a triangle pattern. The pattern suggests a potential rise to 1.15 as long as the price trades above 109.50, with a breach to this level probably sending the price to 107 and maybe lower. How about gold prices? If Trump wins, US stock indices are expected to gain, reducing demand for gold. Additionally, the dollar could gain further, dampening demand to hold gold. But for now, the price trend remains upwards, and gold prices triggered a decade-old cup and handle pattern by the end of 2023 and has a long-term target of almost $3,000 per ounce. This means that dips to the 2,340 to 2,500 area is likely to be supported by traders. How will you trade the US election? Will it be via stocks, indices, gold, or maybe via the FX markets? At Thinkmarkets, we offer all of these assets and more.